Hello, everyone. Thank you very much for joining us for today's conversation on the transformative potential for blockchain and the distributed ledger technology. I'm your host, Jitu Ganji, founder, CEO of TechGrid, and we have our special guest, Paul F. Dowden, who is the co-founder and head of design of L4S Corporation. Paul has not only been, innovator in the blockchain technology, also developed an innovative solution named Tapestry X. We'll go a little bit into the Tapestry X, what's the purpose of it, and so forth. While we are going to talk about the blockchain, AI is taking the world by storm. Open AI to the deep AI, DeepSeek AI. The race is going on.
Yeah.
Well, AI is going to deal with the automation and intelligence, right? Going to streamline the data decisioning, where blockchain is going to bring the trust, transparency, and the decentralization. I see a greater potential on the integration here, another transformative technology. So today, from a simple explanation of origins of the blockchain to the why it hasn't fully realized in the industries, the traditional finance industry, as well as the DeFi and the cryptocurrency, Paul is going to walk us through that through the interactive conversation. So we will keep this as conversational while we are going through the topics. Please take notes and ask questions on wherever you see relevance, and we will pick up the questions and ask Paul to get his insights on that. Let's jump right in. Paul, to begin with, right? Blockchain has been a buzzword for quite a long time. For folks who are new to the concept, would like to hear from you in simple terms. What is blockchain technology?
Okay, great. Well, G2, thank you very much for inviting me, and I look forward to having the conversation and hopefully give the audience some good insights. Yeah, blockchain, most people probably know it being origins from within the ledger that backs the Bitcoin. And there was a famous paper written in late 2008, and Bitcoin was launched in January 2009. What most people don't know is that within that white paper, 3 of the articles are cited for Scott Stornetter and Stuart Haber, who actually created the first public blockchain in 1991. And their purpose was to, they were trying to prove that, well, how can people trust digital updates? Because you can do an update to a database and you can have a timestamp, but you can change an update and you can overwrite the timestamp. So how would you know a data update has been corrupted? And the way they thought to do it was to actually sequence it, and with what's called a mathematical link, if you imagine a sophisticated checksum. Now, the process is called hashing. It's a one-way taking any piece of data and turning it into, for the technically minded, a 64-digit hexadecimal. For the non-technically minded, just think of it as I can create data and make it into a code, but I can't take the code and recover what the data was. So it's a one-way process. So if you take data in a sequence and you hash it with the next sequence, you've actually got this chain of hashed data, so that if you tried to change the data, the sequencing would show that the corruption is evident. Having said that, similar to a timestamp, you could go back and change all the hash links, and therefore you could overwrite it. And initially, Scott Stornetter and Stuart Haber, and I was lucky enough to actually meet Scott through my work with the Government Blockchain Association, explained, he was like, well, hold on a second, in order to prove it, you need someone to check that, and then someone to check them, and therefore, no process is really incorruptible. So maybe I'm writing a proof that says you can never trust digital updates. But his epiphany was that if you had enough good actors, after a while you get to a consensus, and that's a term you hear in terms of blockchain. So that if you have multiple copies of the same ledger and you've got enough good actors, that you've got effectively a trust, you can trust your copy of the ledger depending on who's updated it. And that's what blockchain is really, that a chain of blocks mathematically linked, but then distributed amongst many, so there's a safety in numbers. And if people understand the Bitcoin, um, what you do is you have a miner competes
Mhm.
mathematically to add the next block, and that's what everybody adopts as the blockchain expands. So a blockchain is a chain of blocks linked by this mathematically processed, but as a distributed ledger shared in many nodes.
So Bitcoin, you mentioned Bitcoin, right? It is just a one of the many applications of the blockchain, right?
Mm-hmm.
And which is, in other words, this is about the creating a secure, a digital
Mm-hmm.
ledger, right? That's decentralized.
Yeah.
Oh.
The principle is that normally ledgers work on a central authority. Like
Mhm.
even banks, when they transact with each other, transact through a clearinghouse or a central bank. You know, in the securities world, you know, you execute an exchange, but your shares are ultimately held in a clearinghouse. Now, a custody bank can hold the account in the clearinghouse, and you hold an account with a custody bank, but you've always got this central authority. The thing that Bitcoin did was show that if everybody had a copy of the ledger, when you
Mhm.
wanted to pay me, I wasn't relying on a central authority. I rely on my copy of the ledger to say you're good for that asset to transact with me. So now it allows us to peer or B2B transact without that central authority because we're all operating off the same ledger. And that's the principle of a distributed ledger. You know, it allows two parties to transact with each other without having to go through a central authority. Now, I'll argue the purists want it to be that Bitcoin model where we're purely peer-to-peer. The
Mhm.
reality of it is most of us are going to transact. If we transact in these networks, like people who buy and sell crypto today, go through some sort of intermediary, an exchange or a custody bank of some kind. But the actual settlement of those coins is done peer to peer or B2B.
That's fascinating. Before we get into the financial industry, I'm going to
Mm.
get there. Your journey might have been exciting through the blockchain technologies. We just wanted to hear from you on how this whole thing started, how you get involved in the blockchain, and tell our audience on your journey so that we can get into the deeper conversation.
Well, but there's some technical aspects, weedy things here, but my wife said the planets aligned for me.
Mhm.
My career, or my degrees in aeronautics and astronautics, so I'm actually a real engineer, and from that I was had to learn set theory, which is a kind of math which is often used in the white papers. My father was involved with encryption with radios for security and police forces and other things. So I had an early introduction to that and remember when asymmetric encryption came in, which again is a different kind of encryption, more sophisticated, that's now used when you hear about encryption in blockchain and crypto and DeFi. Um, so I had an interest in encryption. I've got a lay interest, although I don't like to admit this in public too many times, in number theory. And so when you're dealing with when you hash a number, the first thing you do is take the cube root of the first three prime numbers or 13 prime numbers. So you're dealing with concepts, which is in order to get to the more easily understandable bits of what is a blockchain, you have to go through some of these mathematical processes. I've
Mhm.
also spent a career in effectively institutional financial infrastructure. So how do we record an account and record these transactions? So everything kind of my interests, my past experience, things like that, had all the pieces that when I was asked to look into blockchain in 2015 as part of a boutique consultancy, I was just looking at it. Someone was saying this seems to be an interesting way to settle transactions. That's kind of what you've got experience in. Can you look at this? And so therefore, uh, uh, that's what got me into this research. And in fact, what ended up happening was there's a tendency for people to
Mhm.
see this, and with all due respect to all the technologists in the room, as a data science and a
Mhm.
technological solution, whereas really it really was a operational and process control solution. I mean, think
Mhm.
about it. You're going from central clearing to peer-to-peer clearing. It's just allowing that to happen. And what ended up doing was I did my research. I was lucky. It was 2015, And for you, if you know your history, although Bitcoin came out in 2009, it was under the radar for a lot of that time. It got some attention in 2012, 13. Mount Gox, the person who's just been pardoned, was going
Mm-hmm.
on, and there was different other aspects to it. But in 2015, Ethereum was launched, which was sort
Mm-hmm.
of like trying to take blockchain, the ledger technology from Bitcoin, and use it in a more expansive way. From an enterprise perspective, R3 Corda, Hyperledger Fabric, digital assets holdings, they all went live in 2015. So I had all these white papers to look at.
Mm-hmm.
But when I'm looking at them, I'm not looking at them from a technological process or coding perspective. I'm saying, how does it control the assets? How does it record the issues? How does it work from a production perspective? And so what we saw was this huge potential. Peer-to-peer settlement,
Mm-hmm.
settlement in hours, if not minutes, and certainly more consistency of data, less reconciliation. So there's a lot of benefits. However, from a processing standpoint, and this may be controversial for some people, but we looked at it, and this is 2015-16, and I've got articles I wrote even back then saying these things can't scale, they can't handle the capacity, and they're really just transferring an asset from one person to the other. They're not really doing full financing or accounting. And from the Bitcoin model, they tended to be walled gardens, so they weren't interoperable. If you listen to the
Mm-hmm.
industry, what do you hear? Oh, I'm having scaling issues, I have capacity issues, interoperability. They haven't got to the accounting bit yet. So that was my introduction. I just looked at it from a perspective of how do we make this work for what was the institutional financial industry. That's my background. And in order to overcome those problems, we ended up doing a complete reset of the design, and that's the
Mm-hmm.
origin of Tapestry X.
So the inspiration to the Tapestry X is really from the fascination that you had and the problem that you saw. Um, right. How can
Well,
you?
I would say my again, I did a degree actually in I'm an aeronautics astronaut, but I ended up being a manufacturing engineer, so I'm process engineer by trait, and so that's what I tend to see things as workflows. What's the bottleneck? Where's the capacity constraints? So that's my natural inclination. And my career in banking has been, how do I make the infrastructure? Am I designing it from scratch to be as optimal as possible? Or am I fixing something that's in problematic? Or am I re-engineering something? So the idea of process design is something that's, I've just practiced. I wish my music playing was as intuitive as my process engineering, and then I might be a rock and roll star. But unfortunately, my gift is in process design.
Awesome. That's interesting. I think you saw the gap in the market that you're being associated with. So let's get into that financial services use case, right?
Yeah.
Um, Let me look at the chart window here. Okay, so for folks who are on the LinkedIn Live and the Zoom charts, every now and then I will be looking into that. I will bring up the questions. Paul, I'll worry about it. From the applications in the financial services perspective, it's often discussed but not fully understood, right? We
Hmm.
have been talking this about it. There is no full implementation of it. Can you share some specific use cases with the
Hmm.
blockchain technologies making a real difference in
Yep.
the traditional or the DeFi
Yeah.
industries?
The challenges are, and again, remember, we're talking the industry is coming. Enterprise blockchains are really coming up on 10 years in terms of being existence. Yet they are still struggling with scale and capacity and functionality, and even in the DeFi crypto world. So there's two worlds here. And it's interesting, they're both jealously looking at each other. The crypto DeFi world seems to have the innovation, but not able to take on the big guys. And the big guys have got all the money and the assets, but they can't seem to make this technology work for them. And when I say it doesn't work for them, it kind of works. The problem is that they took the blockchains that were available, that were variations on the Bitcoin model. They've changed it, gone from consensus to independent validators, but they're still struggling with scale and capacity, and certainly the financing and accounting aspects. So you've got projects like there's one called Project Guardian that looked at how
Mhm.
do we digitize private investment funds or funds in general. And while they've got a solution for it, it's not an industry that's big enough, or it gets clunky because they're recording it and bridging it between multiple blockchains. So the controls and risk, which are tantamount to a fiduciary or regulatory company, has struggled. Um, there's been industry initiatives, what they call the regulated liability network, where they
Mm-hmm.
looked at just making payments. And while they showed that things could be done, again, it struggled with scale, and it was just purely a payment solution. It wasn't a financing solution. It wasn't securities. There's now a regulated settlement network that went through a process where they were looking to say, okay, how do I, in a investment purchase, your money is transacted for a security, an equity or a bond or anything else. But again, they've hit sort of brick walls. But we're actually talking to SIFMA, the organization that helped, the regulatory guidance organization that helped with those. So those are real. There's repo. You hear about repo. Repo is a form of, if you've got a government bond, you can lend it as collateral to borrow money. So you've got a collateralized loan, and there's two sides to it. If you've got excess money, you can lend it with the government bond as collateral. It's called a repo because it's a repurchase. I'm going to sell it to you tomorrow and buy it back at a higher price, and that's
Mm-hmm.
worth the interest on the loan that I borrowed. So they're called repos because they're repurchase agreement, but it's the way that the big banks and brokers finance themselves. But the solution that exists for that only works if both entities are in the same holding company. It doesn't
Mm-hmm.
work between. So you've got these sort of almost proof of concepts out there. The interesting thing is that there's a lot of money being made in crypto and DeFi,
Mm-hmm.
but they're still relatively small in terms of, although billions of dollars for any of us in as individuals sounds like a lot of money, the real world assets are in the hundreds of trillions. And
Mm-hmm.
the FX market trades $5 to $10 trillion a day, and these DeFi protocols, they measure their total value maybe in tens of billions, but their volumes are relatively small. Again, because the protocols just really can't handle the capacity or scale that you really needed if you were going retail. And my last point would be as well is that the problem with when you've if a financial advisor came to you and said, I've got this great investment, it'll get you 18% return, you say, well, that sounds good. Well, yeah, but I take your assets and then they're going to go away and they're going to be contained in a smart contract algorithm. You won't have any record of them, but it will pay you 18%. But if
Mm-hmm.
there's a failure over there or something happens bad, it goes away and you've got no recourse. Oh, by the way, I have no clue who those people are or who you transacted with. That's what the real crypto DeFi world, which as an individual you're able
Mm-hmm.
to do, right? Especially as an offshore
Right.
individual, but to do it realistically. So while the technology has been shown to work in crypto DeFi to a certain extent, and
Mm-hmm.
to a lesser extent in the TradFi world, it's still really at an early stage, unfortunately, despite a lot of the headlines.
Right. I know any great technology has to go through these hurdles, and blockchain is no
Mhm.
exception for that. So looks like these challenges are cultural and technical, right? And the scale. Do you think regulatory uncertainty plays a big role here as well?
Uh, Certainly in terms of adoption, I mean, we've seen the now with the change in administration, there's a more friendly administration,
Environment,
like
so to speak.
so
Yeah.
because they want to encourage. They obviously see the technology again. They see the potential, and
Mm-hmm.
they want to encourage it. I mean, a key thing that's changed in the US is it's called SAB 121. And what it was is it's a requirement that
Mm-hmm.
if you custody your securities with a custody bank, it's not on their balance sheet. They're just looking after your assets. If they lend you money, that's on the balance sheet. But if they
Right.
just sort of say, I'm taking your securities and lend, they don't have it on their balance sheet. Well, this requirement, this accounting bulletin at 121, required a bank to have 100% reserves behind any crypto, which means the bank would have to pay for the interest
Mm-hmm.
on 100% of the value you're put, which made it so it didn't make it illegal, but it made it just commercially unviable, which is why the US banks weren't offering custody. And you'll see a lot of the digital exchanges are really offshore, even though you can use them as an American. So there's different environments where they're probably encouraging, while they want to do prudent regulation, particularly around accounting and tax reporting, um, there's definitely an opportunity to do more in the US. But my argument as well is that there's been very friendly environments in Asia, in the Middle
Mhm.
East, and again, they've still struggled with some of the issues that we've identified. But those um, while it certainly helps to be in a friendly regulatory and fiduciary environment, it still comes down to, and what my belief is that it's a design. You have to define the requirements of the use case and design the application to meet those requirements. If you start with an application and now you try and force fit it, you're going to end up with issues. And that's kind of unfortunately what's happened in the blockchain world.
Awesome. So, no, switching the gears onto the tapestry X, this is one of the solutions, right,
Mhm.
where blockchain technology inspired for that, and there are some challenges with that. That's where the tapestry X, right, solution came into picture. Can you share a little bit more about it? What exactly tapestry X and how it is solving the problem?
Sure. The key issues, I mean, just in general, were we've talked about performance in terms of capacity and scale. And obviously, there's compliance in terms of, how do you meet the reporting requirements of things. But the other key thing is really in the accounting. Unfortunately, it sounds a little bit obvious when you say it, but one of the key words you mentioned, distributed ledger technology. These are ledgers. So by
Hmm.
definition, they're a financial ledger. And if I was trying to, I say, oh, you use QuickBooks today, I've got a better ledger system, but it doesn't have any double entry accounting. It's just got single entry things, and I do this sort of hash link to it, and I just transfer assets between people, but we'll find another way to interpret it into accounting. You'd be like, why am I buying a ledger without accounting? So that's one of the big holes. So when we looked at Tapestry X, we said, okay, how do we make it flexible? And
Hmm.
so we had to find a way to generically configure any transactions. How do we push? Um, the irony of blockchains is you propose a transaction, it goes to a virtual middle, there's a validator or consensus algorithm that decides what's going to be input in the ledger, and then that gets shared back. The problem is that process of proposing and formulating and validating and then sharing back, there's latency in the process. That's actually where the capacity constraints are. And so you hit all the performance things. We sort of said, can we bring the controls to the edge truly, so
Hmm.
that you can actually process your transactions between the parties and process in real time? Now, the real trick was the ledgers, remember, are all supposed to be the same, so they have to synchronize, but they synchronize in the current blockchains through these transient central authorities, ironically,
Right.
validators telling us what to do. We found a way so that we had a data structure that allowed to synchronize based on the transaction data alone. Think of it as an n-dimensional puzzle where anybody can add to the puzzle, but having added that piece, no one else can add it, and everybody else can copy it based on the transaction data alone. So that means we've got massive parallel processing within each of the nodes, and each of the nodes is synchronizing with the other nodes, and it's all done with the controls at the edge. But the real key thing, and this sounds again, we we hate to sort of feel like we're stating the obvious, but the problem with a blockchain, it is a continuous sequential state change log. So
Hmm.
if you received Bitcoin or any asset on a blockchain 3 years ago, your only reference is that 3-year-old block. Now imagine if to spend $100, you had to look at a 3-year-old bank statement and say, look, there it is, and look at all
Right.
the other statements. I haven't spent it since then. That's what you have to do with a blockchain. What we did was we brought it back to normal ledger processing and said, starting balances, transactions, ending balances, archive the transactions, carry forward the balances. We can still have a continuous mathematical link, but we're now only concerned with today's balances and today's transactions. But because we have transacting periods and double entry accounting journals in that mathematically hashed record, we can record transactions today, but we can record future dated payable receivables. And I joke that all the other blockchains were a technology of the future that forgot the future because they can tell you what happens today and they can tell you what happened in the past, but they can't tell you anything about the future. And the only place they can do it is in what they call a smart contract. But that's just an algorithm that wakes up on the day and says, I've got to do something. It's not an accrual, it's not an accounting based record. So the combination of those things, and the last thing is we created what we call our airlock, which allows our
Hmm.
network to interoperate with legacy infrastructure as well as interoperate with other networks or even other protocols. So those things were, but again, we sat back and said we can see the problems,
Hmm.
but what are the requirements of the industry? And then can we leverage the benefits of this technology to meet all
Hmm.
those requirements? And that's where Tapestry X came out.
So that's the current state of the things and the challenges and how the Tapestry X is addressing the problem. If we talk about the future, right? Blockchain is a transformative technology, and its for full potential need to be realized in these industries, right?
Hmm.
So what are those critical elements that need to be addressed to overcome some of the challenges that you're mentioning?
Yeah, yeah. I mean, again, I mentioned initially, like the idea that you could go to a network
Hmm.
um, and do a peer-to-peer transaction or a B2B transaction in real time um, um, was phenomenal. Now think about the network, but really what the blockchain offered was, as accounting does as well,
Hmm.
is an agnostic ledger to whatever assets you want to transact. Now,
Hmm.
what most people outside the financial industry don't know is
Hmm.
that whenever you buy something different, like if you buy an equity, that's cleared through
Hmm.
DTCC. When you buy a government bond, it's actually cleared through the Fed book entry system. When you buy an option, it's cleared through the option clearinghouse. And then you've got the futures clearinghouses. Every product needs a different infrastructure, and that's just the US. Now think about it, that's
Right,
replicated in every country in every region. And
right.
then the banks may have clearinghouses or interbank transfers. There's all this stuff. So when you're dealing with international institutional finance,
Hmm.
you're really going through one big institution that plugs into all those infrastructures. Now, the problem is that there's all that friction and inefficiency. What a
Correct.
distributed ledger means is that I don't care whether I'm buying an equity or a bond or a
Hmm.
future. I just want to reflect a tokenized
Hmm.
asset in the same format. And that's the real potential, that we start to make the whole process
Hmm.
simpler. If you think about it, this Zoom call, and think of everybody that's on this Zoom call, if any of you are old enough to remember video calls before the internet, it's like
Uh-huh.
you had to establish a single connection, a line to line, and there might be possibly three or four parties that dial, separate parties that dial in, but it all had to be
Hmm.
synchronized and set up, and you had a technologist. Now, without anything, we just set up a Zoom call, invite as many
Hmm.
people, they click a link and they can join the party. The simplicity of the internet is because everyone's using the same communication protocol. So the real
Hmm.
potential of blockchain is to make transactions so much more efficient and again, although you swipe your card when you go to the deli to buy a sandwich or a cup of
Right,
coffee, you can go online. You go, wow, I got debited like that.
right, right.
But the merchant doesn't get their money for 2 days because there's so much friction in the system in
Uh-huh.
terms of how many steps it goes through, and that position has to be financed, and then it's funded, and then it's paid. And now imagine you swipe your card and the vendor gets paid almost immediately. That's going to be make a real difference in the world in terms of efficiency of cash flow and everything else.
Right,
So there's a huge potential there for. That's
right.
why people are. Although I said we've struggled to get the big implementations over the last 10 years, that
Uh-huh.
potential is still driving everybody.
Correct. Yeah, I think that's one of the real use case, Paul, in my case. We do a fair amount of international wide transfers. It takes anywhere from 7 to 10 business days, and
Yeah,
sometimes
depending on your
get
currency.
stuck
Yeah.
in the intermediary banks and institutions. You end up spending 30 days to follow up and all those things. But this is, near real time or real time. It will happen. That
Yeah.
would be an awesome implementation for that. Now, we have been talking about the financial industry, but I bet this solution is applicable for many other industries too. Could you talk us about the supply chain and the other industries too?
Oh, yeah. No, that's um, obviously financial services. It's interesting because there's actually special accounting for banks because
Correct.
their product is money, right?
Yep.
Whereas most companies and anybody here who runs their own business understands you're running an income statement and a balance sheet. So you're looking at, your inventory of goods. You may be transacting, energy. You think about it in terms of
Mhm.
telephone companies. It's time. It's there's, but at the end of the day, they're all assets that have to be transacted. Um,
Mhm.
they're all assets that have to be recorded. So when you're looking at supply chain, again, you've got this opportunity to unify the process of assets moving through a production process or just a shipping process,
Mhm.
and you can track them. Now, what normally happens is that the goods have to arrive, and then the money's paid 2 to 6 months later, whereas you could synchronize that. So there's efficiencies to be gained in that. What we've said to the people in supply chain is forget about the goods and the money. What
Mhm.
about the trucks that deliver it? You can track them too, so they get their scheduled maintenance. You can track the machines. You can track uh, all the processes as well. I mean, again, the point being is that right now, even if you're using what they call an ERP, Enterprise Resource
Mhm.
Planning System, you have to configure it and customize it, and it's good for your little process, but nobody else's. Now
Right.
imagine that ledgers in a consistent way, so whoever your suppliers are, you can be transact in the same format. Just keep
Mhm.
going and again, they've made supply chains very efficient. Um, but the problem is with COVID, we saw that they were
Right.
very weak, sensitive. If you broke down, it was very hard to then establish a new one. Now
Right.
imagine if you say, do you use the DLT protocol? Okay, boom, I can transact with you starting tomorrow. You
Mhm.
know, and again, apart from the logistics of getting the
Right.
trucks and everyone to line up, but
Right.
from a ledger perspective, you've got an easy way of integrating with every supplier. And again, you don't have to worry about email on the internet.
Uh-huh.
Why? Because everyone uses the same email. Oh, I've just met you. I can send you an email without actually configuring anything. I just have to, because your companies use the internet protocol, I can talk
Uh-huh.
to you. I can do a Zoom link. So that's ideally how easy transacting should become.
Cool. I have a question. I will reserve that for towards the end of it. I have one or two other questions I would like to cover so that it makes it relevant to there. So now, right, we talked about the past and the present and the future. We are talking about if you have to paint the picture for the future from 10 to 20 years ahead, right? Where do you think this blockchain technology would lead to?
I always like the Yogi Berra quote, which says, "The future ain't what it used to be." Which, as silly as it sounds, it's really sort of saying that what we imagined the future a few years ago, there's a different one coming now.
Right.
Um, um, I think the big thing to recognize is that it's really going to commoditize transactions. Like I said, make them consistent, make them really easy to facilitate and enact. And the world of transactions will move as quick as TCP/IP, the Internet Protocol, made communication uniform, right?
Mm-hmm.
And then
Right.
opened up the wonders of the internet. Now, if
Absolutely.
we make transactions, now, like to say, if we want to communicate, where am I? Where are you? We
Mm-hmm.
connect, we communicate. Now, imagine you go, I want to transact with you. Where am I? Where are you? Can we transact? If we can make
Mm-hmm.
it that simple, it really transforms the world. And most people, although they transact through a bank or a broker, which are regulated and licensed entities, most people don't know that other industry players have, limited banking licenses because they move money, or minimum broker licenses because they deal with securities. So the analogy I like to give is, and again, it comes back to that internet analogy
Yep.
comparison. If you'd have gone to every major telephone company in the late 90s and
Mm-hmm.
said 20, 25 years from now, your
Mm-hmm.
major competition is going to be that nascent online bookseller called Amazon and
Mm-hmm.
that DVD delivery service called Netflix, the telephone company would have looked at you and said, "What? How? I mean, like, which universe are you in?"
Right.
Well, the thing is connectivity became commoditized, and what was the important thing? It was content or accessibility.
Right.
And so the telephone companies merged with the cable companies, and unbeknownst to them, Amazon and Netflix business plans changed, so they became content providers. And
Mm-hmm.
so now you've got this weird thing where the idea, and again, partly with the mobile revolution, but the idea of the old telephone company was the people that connected you is just not
Mm-hmm.
true anymore.
Mm-hmm.
Now you're dealing with transactions. If I said to a bank or broker today, your competition in 20 years' time is, and name the little startup of your choice that's got nothing to do with banking or broking, it's like we can't imagine it. But if you think of the companies that have
Mm-hmm.
networks, what is a
Right.
distributed ledger? Networks. They are the telephone company, the mobile telephone companies, but they're the social media companies, but they're the Walmarts of the world.
Right.
Yeah. So if they're the car companies of the world, they have
Mm-hmm.
international client bases across networks. If they can link people and create transactions, they
Right.
can broaden. So I'm giving a vague answer. All I'm
Right.
saying is that there's this huge potential that we can't imagine because if and I know it's hard for any young person to imagine the world without the internet, but if you
Right.
can see the world before internet, without internet, but think of it as like, what was the world like with the first iPhone, and what's it like with the iPhone 16 today?
Right.
Okay, there's a transition, all right?
Right.
That's what's there's a huge potential that I think the exciting part is going to be what can you do with this technology, not so much, how do we, what does it do?
Right. So I know we covered a lot of ground here and would like to hear from audience also.
Mm.
Please ask the questions. I'm going to go over some questions already. Got it.
Okay.
A Paul here. Given the value prop, what is the resistance in adoption of this technology by industry players?
Um, I, that's a good question. I don't know if there's a so-called resistance. There might be. I mean, everybody. It's funny. I told you I met Scott Stornetta and put the first public blockchain. When he was advising us, he didn't give us any technical advice. He said, "You're crossing the chasm. You've got to go from the early adopter to the early majority. The challenge with that is the early majority. Nobody wants to be first. So you've
Mm-hmm.
got a chicken and egg situation where you can't. You've got to create a beachhead, bring someone first." So
Right.
there's two natural resistance. There isn't a natural resistance to how do I make this work, and do I want to take the risk, right? There's that. But the other resistance, as I said, is right now it's about the capability. The blockchains don't have the capacity, scale,
Mm-hmm.
or accounting and functionality to really
Mm-hmm.
take on the transactional industries. And
Mm-hmm.
that's what I mean. It's a little bit self-serving for me, but that's what we're saying. That's what has to be done. So it's more the the full potential hasn't been realized or implemented yet, but we want to be at the forefront of that. But again, the other thing as well is there's two major use cases with blockchains. Obviously, the easy one is the network of transacting parties. But
Right.
if you don't have a network,
Uh-huh.
or it's better to be centrally controlled, there's nothing
Uh-huh.
wrong with that. So you don't a blockchain's not going to replace everything. The other one is when you synchronize data. And again, if it's easier to have a central database and people share it, then that's your answer. If you've got multiple parties that want to share and synchronize the data, that's what a blockchain can be used for. But my sense is the resistance is really about the utility of the current designs more than it is that people want to use it. They see the potential, they just want.
Mm-hmm. If somebody wants to getting involved with the blockchain, where would you recommend they start? That's a question from us.
Don't. It's an endless pit of research, and um, I was lucky. I got involved early on, so as it's evolved, I've been able to keep up. And I've got a website where I do videos
Uh-huh.
because I feel sorry for anybody coming into the industry right now. My sense, though, is like um, blockchain is about to really explode in terms of its full capability and
Uh-huh.
functionality and
Right.
capacity. Um, what's the exciting area to get into is
Uh-huh.
the applications that can use it. Think about it. Oh, TCP/IP revolutionized the internet, but the
Uh-huh.
revolution was really the Amazons, the Yahoos,
Mhm.
the Googles, yeah, the people that knew how to use the technology. So I
Right.
would say if you need to understand blockchain
Mhm.
and why
Uh-huh.
it's different and how it works, and the same of understanding from a lay perspective, how does the internet work? It breaks up packets of data and it's networks of sharing data. But you don't need to really understand the nitty gritty. You just
Right.
need to understand. So I would say, again, because I don't want any competition, but go into the application space. But I really say that's the
I think
better
it's
place to
time to
start.
start, right?
Yes,
Think
say
about the
how you can.
application level
Yeah,
than the solving the protocol level
yeah.
problem.
But the
That's
key thing is one of the big areas is crypto and DeFi is showing a lot of innovation, but it's not able to get into the TradFi world. So if you can create crypto DeFi for the TradFi world, you've got a golden ticket.
super. Yeah. So beyond Taps 3x, how are you engaging with the whole blockchain technology industry as a whole?
That's it. Well, I mean, like I said, I create videos on YouTube and LinkedIn, partly educational, partly to challenge the industry, and then try and participate in as many events, like I said, from a constructive way. I'm an active member of one of the not-for-profits, which is called the Government Blockchain Association. They're based in DC, um, and they actually have helped them, larger team, a greater team of over 20, 30 people, although there was a core of like 4 or 5 of us. We developed a blockchain maturity model. And again, so as well as promoting my own solution, I've actually helped create a standard which
Hmm.
assesses blockchain solutions. And as much as, like you said, I'm some critical of some of the other solutions and their limitations, we also recognize that institutional finance is big, huge scale, high capacity, very fast, everything's demanding. If you're running an election and you're counting votes, it's a finite environment. If you're just doing a simple healthcare records and it's not that, capacity driven, but it's more about security of data, then there's other use cases that work. So, working with the Government Blockchain Association, we've developed this model. So, if you're looking to promote your solution, you can get an assessment done. If you're looking to buy a solution, you can say, have you been through the blockchain maturity model? Because then there's an assessment against actually what are 11 elements of way of looking at a blockchain. And those assessments are professionally, done and assessed. So I've worked with them. Like I said, I've worked on a voluntary basis with different regulatory organizations and other things because I try and help promote the industry as much as just participating.
Awesome. I know we are on top of the hour for the webinar session. This has been, really engaging, fascinating for me, and I believe for many of the our audience too. Thank you very much for sharing, incredible insights, Paul. And we can see that, how your journey started and how you came up with the idea and the product, Tapestry X. If anybody wants to learn more about blockchain technology in general or the Tapestry X for the big ideas that you have, please feel free to reach out to Paul F. Dowding on LinkedIn and tapestryx.com, l4scorp.com. There are many ways to reach out. Everyone who joined us, thank you very much. Enjoy your afternoon or morning or evening, wherever you are from the right global map perspective. Thank you again. We are going to post this session. Paul, you want to say anything to the people?
No, it was great, and thank you again for inviting us. And enjoyed the conversation, and look forward. I should mention, thanks to you, TechGrit, that we're actually able to advance Tapestry from a technological perspective. And I think, as much as I've said the solution is a process engineering, the coding of our solution is a critical element in terms of the elegance and the efficiency of the design, and you've helped us tremendously with that.
We are glad to be part of this journey, Paul, and we'll be there for you. Thank you again, everybody. Have a great day. Thank you, Paul.
Bye.
Bye-bye. Good one.